Hello and welcome to this video summary of the book, A Random Walk Down Wall Street by Burton Malkiel. This book is considered a classic in the field of investing and has been widely read and recommended since it was first published in 1973. In this book, Malkiel challenges many of the common assumptions about investing and provides insights into how individuals can make informed decisions about their investments.
Chapter 1: Firm Foundations and Castles in the Air. In the first chapter, Malkiel introduces the concept of two different approaches. To investing: fundamental analysis and technical analysis. He explains that fundamental analysis involves analyzing a company's financial statements and other data to determine its underlying value. While technical analysis involves analyzing past market data to make predictions about future market movements. Malkiel argues that both approaches have their limitations. And that investors should take a more diversified approach. Chapter 2: The Madness of Crowds. Chapter 2 discusses the role of psychology in investing. Malkiel explains that investor sentiment can have a significant impact on market movements, and that investors often make decisions based on emotions rather than facts. He argues that investors should be aware of their own biases and try to make rational, data-driven decisions. Chapter 3: The Behavior of the Stock Market. In Chapter 3, Malkiel examines the behavior of the stock market over time. He explains that while the market can be volatile in the short term, it tends to be relatively predictable over longer periods. He also argues that the market is generally efficient, and that it is difficult for investors to consistently outperform it. Chapter 4: Stock Valuation Ratios – How to Value a Company. Chapter 4 focuses on stock valuation ratios. Which are used to determine the relative value of a company's stock. Malkiel explains how to calculate and interpret commonly used ratios such as the price-to-earnings ratio and the price-to-book ratio. He also discusses the limitations of these ratios. and explains that investors should not rely on them exclusively when making investment decisions. Chapter 5 – Technical and Fundamental Analysis. In Chapter 5, Malkiel compares and contrasts the two approaches to investing. That he introduced in Chapter 1, Technical Analysis and Fundamental Analysis. He argues that both approaches have their limitations. And that investors should use a combination of both approaches along with a diversified portfolio to achieve long-term investment success. Chapter 6 – A penny saved is worth 2 pennies earned, expenses and taxes. Chapter 6 discusses the importance of managing expenses and taxes in investing. Malkiel explains that high expenses and taxes can significantly reduce an investor's returns over time, and that investors should be careful to minimize these costs wherever possible. Chapter 7 – The biggest bubble of all, surfing on the Internet. Chapter 7 examines the Internet bubble of the late 1990s and early 2000s. Malkiel explains how investor enthusiasm for Internet stocks led to a speculative bubble that eventually burst, causing many investors to lose significant amounts of money. He argues that investors should be cautious about investing in trendy or speculative stocks, and should focus on fundamentals instead. Chapter 8 – A fitness manual for random walkers. In the final chapter, Malkiel provides a fitness manual for investors. He offers practical advice on how to construct a diversified portfolio, how to manage expenses and taxes, and how to avoid common investing mistakes. He also emphasizes the importance of staying disciplined and sticking to a long-term investment plan.
Conclusion. In conclusion, a random walk down Wall Street provides valuable insights into the world of investing. Malkiel challenges many of the common assumptions about investing and provides a practical, data-driven approach to building a successful investment portfolio. Whether you are just starting out as an investor or are looking to refine your approach, this book is a must-read. Thank you for watching, and I hope